Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Orient Abrasives, one of the small cap stocks of the Orient Group that has not performed well over the last year and a half. So let's understand what are the valuations and where is it headed over the next couple of years. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So, the company was established in 1974 and it is the largest manufacturer of calcined and fused alumina products. So, basically, they produce raw material for the manufacturing of, or you can say for the usage in the manufacturing of steel or metals. So, they are high alumina raw materials. Monolithic and ceramic propellants are also made, so they are also used in ceramic products making. So a very important ingredient in the construction ancillary play that we talk about with Kajaria, Somani, etc. So majorly the usage of these products are in iron and steel industry, and is the part of the Ashapura group, which was established in 1960. About the financials, well, if you look at the June 19 numbers compared to last year, the sales are up 49% and the profit is up around 222%, and that is magnificent that the profit has doubled. But the prospects, it doesn't look so bright. So over the last couple of years, what has happened is that steel and raw material prices have risen sharply from those 2016 lows. So 17 and 18 had been very good years, and that's why riding on those high raw material costs, because they supply raw material Orient Abrasives, they were getting very good prices for their products, and eventually the bottom line growth was seen in the profit and loss account. The return on capital employed is 11.3% because this is a capital intensive business. That's why I put up this ratio. Operating profit margin is around 14%, which is quite decent. Uh, and Similarly, net profit margin is pretty good, but the return on equity is only 7%, which is slightly lower than the industry and lower to what I feel that investors should look at when they buy into companies. They should look at ROEs of close to 20% or more rather than 6-7%, because this could very quickly change into negative territory in any quarter or any year, if the ROE is around between 5 to 10%. So why the stock is down even after such magnificent results? Well, raw material costs have risen. So what has happened is the making of these products is costing the company dearly. So the raw material costs have gone up sharply. There have been heavy small cap sell off. We have seen that small mid cap have been painted with same brush, and many small and mid cap companies have been sold off appreciably over the last couple of years. Some have lost even 90% of their value, even though the results have been decent and they are not loss making companies, yet they have been battered out of shape. And Orient Abrasives have been no exception in that. Over the last 3 years, although the profit has jumped sharply year on year, but over the last 3 years, the profit growth have been only around 7-8%. So it had a net profit growth similar to what it is right now 3 years back, and it is again standing at the same level. So there have been no constant profit growth of 15-20% that investors would like, such that happens in, you can say, any FMCG company or consumer durable company. So here the profit growth over the last 3 years have been extremely flat. The debt has increased over the last couple of years. So the increase in debt have been slow, but it has been gradually going up rather than going down. And as you would understand that the companies which are taking in a lot of debt are going through a lot of trouble at the moment with the high interest rates, etc. Even if the interest rates come down, if there is debt, there are options of companies in other sectors which are debt free, and people are flocking towards them rather than these companies, because along with debt there comes the another added factor of pledging of shares, etc., and so on and so forth. Although there are no pledges in Orient Abrasive at the moment, the debtor days have increased, so it's around 170 days compared to 110 days, which was a year back. So it is increasing sharply year on year, and the return on equity, as I mentioned, has been quite low. It can be, I mean, you cannot expect such a capital intensive business to have a return on equity in excess of 20%, but at least 12 to 15% is what is expected from Orient Abrasives. What are the macro level problems that the company is facing? So, apart from these industry specific or company specific problems, we have macro problems also aligned to the productivity and profitability of the company. The global slowdown has really hurt the companies which are into, you can say, metals, mining, so infrastructure, etc. So, if there is low demand of metals and commodities, then even even companies which make raw materials for such products would have low demand, and that is what is exactly happening with should be happening with the Orient Abrasives going forward. Now things are looking very difficult on the ground, as I see domestically, because of the infrastructure slowdown that we are facing, and due to which there is a talk of the recession in the economy, because the infrastructure and real estate slowdown is taking place in a big manner. And if that picks up, then Orient Abrasives will get a lot of order, because there will be a lot of demand of steel and iron. So the numbers doesn't look like that it could be consistent over the next 2 3 years, and that's why people are not dabbling into such stock. People are looking for safety, people looking for good quality companies giving them 14 15% return yearly, rather than going for multi-baggers at the moment. And this is the reason why stocks like Orient Abrasives, even with very good numbers, are not performing. And I have talked about a lot of stocks. I've talked about a multi-bagger pick like Kilpest, I've talked about VGuard, etc. They are not moving, and the reason is that people do not want to get into small or mid cap companies. Rather than, they want safety of management, safety of the stock and company with the nominal return, and they are looking at companies like HUL, etc., which are at 52-week high and have high and have performed very well over the last couple of years. So they are thinking it will do the same. They'll do the same over the next couple of years, and they are flocking towards those companies, which I don't agree with, but that is how the market is going. So you need to take that into consideration as well. Infrastructure need to pick up for Orient Abrasives to do well. This is quite obvious with the kind of business that they are into. So what needs to be done? I would say you need to avoid for the moment, even if the stock has declined so much. If you have a 7 8 year view, then you can buy gradually, but don't expect a turnaround in the stock price over the next couple of years or so, because things could be difficult even next year for small and mid cap stocks. Even if the company does well, even if the ground things change, we could see a move in the stock, and then again the cooling down of the stock price. So you need to understand that. So wait for up moves, wait for the things on the ground to change, to buy big, and buy cash rich businesses rather than these businesses. Buy businesses which you can say do business on cash, and they get payment straight away, and they don't have any debt. Something like an FMCG companies, which have come down a bit, not at 52-week high, and so on so forth, consumer durables, etc., and put only 5% of your total investment. So this was my video on Orient Abrasive. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.